Good afternoon. We're doing it live right here, Mottek On Money. Weekday afternoons at 4 o'clock, doing more at 4 in the afternoon, right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all of your favorite podcast platforms. Well, stocks finishing lower today in what turned out to be a volatile session with the three benchmark averages showing their worst one-day performance since early March after the stronger-than-expected economic reports and a rally in commodities, adding to fears that the Fed might need to hold off on lowering rates longer than expected. We also heard from a couple of Fed heads today, including the San Francisco Fed president. Big news for gold, hitting an all-time high, about $2,300 an ounce. Cryptos, meanwhile, have been pulling back lately, with Bitcoin down to around 65,000 now. The S&P 500 came in for a closing loss today of 38 points. The Nasdaq slipped 156. The Dow down nearly 400 points today, the biggest one-day point drop since March 5th. Also, bond yields, government treasury yields, finishing at their highest we've seen in quite some time. The yield in the 10-year note is back up to 4.36%. That's the one that impacts the fixed-rate mortgage rates. Oil also hitting a new high for the year, ending above $85 a barrel for the first time since last October. We also got the latest readings on auto sales here in the U.S., rising nearly 5% from January through March as buyers stayed in the market despite high interest rates. In fact, borrowing costs still around 24-year highs. Electric vehicle sales growth, though, slowed during the first 3 months of the year, with mainstream buyers wary of limited range and a lack of charging stations. We'll get into what's happening in the car business later this hour with our go-to car expert talking all things cars. We'll talk about it with Lauren Fix, who'll be joining me live later this hour. Also, on taxes today, we will get the very latest from America's leading taxpayer advocate, Grover Norquist. The president keeps talking about not raising taxes on any Americans earning less than $400,000, which has proven to be false, and now somebody got the calculator out, and it turns out even if it were true, that $400,000 number is now worth just $337,000 thanks to inflation. I'll talk about that and more tonight with taxpayer advocate Grover Norquist, president of Americans for Tax Reform. But first, on your money, the markets, and the economy, and the whole works now. Joining us live is Paul DIETRICH, B. Riley, Wealth's chief investment strategist. B. Riley, headquartered here in the Los Angeles area. Paul DIETRICH, thank you very much for taking the call here, and what's been a very interesting day here on the second trading day of the second quarter of 2024.
Yes, it has been. If you look at the stock market today, by almost any measure that professional investors use to determine whether the market is overvalued or undervalued, the stock market is historically wildly overvalued. It's almost completely untethered to the stock market fundamentals like earnings and other technical indicators, et cetera. And the two things that have been driving the stock market have been kind of the hype over AI, artificial intelligence, but even more so has been the belief and almost delusional belief of so many people on Wall Street that there were going to be big rate cuts this year. I mean, remember back 8 weeks ago, all of Wall Street, almost 100% of Wall Street believed that we were going to have 6 rate cuts this year, and there was almost 100% chance that they would start in March. Then the Federal Reserve meetings came, and the Fed said, no, we're going to see at most 3 rate cuts this year, and depending on inflation, it might be higher for longer on these rates. Now, as of today, a whole bunch of the people who vote on the Federal Reserve's market board, they basically were saying that maybe it won't be 3 rate cuts, maybe it'll only be 1 at the end of the year, and then several people, including Bank of America today, said it probably won't be a rate cut until March of 2025. That's what caused the downturn. And as people get used to that and they take their pencils and yellow pads out and start doing the calculations of what it means to have rates stay high for longer, even into the end of the year 2025, and the valuations in the stock market just make no sense at that level.
On your live with Paul Dietrich at B. Riley, and you mentioned the Fed head speaking. Among them today, the head of the San Francisco Federal Reserve said, that's Dr. Mary Daly, said there's really no urgency to cut rates in light of how long it's taking for inflation to ebb. Inflation, she said, is coming down, but it's slow, bumpy, and slow. She spoke at an event today in Las Vegas. And we also heard from the Cleveland Fed president, Loretta Mester, today that she still expects 3 interest rate cuts in 2024, but added it was a close call. This at a time when inflation remains stubbornly high, and it appears to be upward pressure on inflation now, with oil hovering above $85 a barrel, the highest we've seen so far this year. Gas prices rising again, and curiously, Paul Dietrich, gold at an all-time high, which is an inflation hedge. Just at a time we're told inflation is easing, all of a sudden gold is at an all-time high. How do you take all of that in?
Well, in terms of gold, of which I hold quite a bit in my own portfolios for clients, it's done very, very well. But it's where, I'm not always the biggest fan of gold as an investment, but I am a big fan of it as an insurance policy. When there's enormous risks out there and there's the possibility of things going very, very wrong, gold does its job and is going up. And I think a lot of smart money is hedging what they have in the market against gold. And I think we ought to pay attention to that. It also is an inflation hedge. And not only, we've seen a 5-month high today of oil prices, but it's not only that. Salaries, and we have almost full employment in the United States. Salaries are going up higher than inflation. That's inflationary. You look at the service industry, which is, larger than, almost anything else. Prices are going up, and they have to pay higher salaries. Manufacturing is going up. A lot of the raw material costs are going up, and everyone knows that not much is going down at the supermarket. I just see all the key elements that make up inflation, and it's hard for me. I'm not saying that we're going to see it continue to shoot up. I don't think that's the case, but we're going to go sideways for a long time with possibly an upward tilt to inflation. And that will make it impossible for the Fed to cut rates anytime soon.
And with the rates, credit card rates pretty much at an all-time high here. The Fed funds rate, at a 24-year high, and that's probably one reason why people aren't feeling so great, despite the record run-up in the stock market and some of the other positive readings we've been getting lately. Back to the market here, based on what you just said, are you concerned about a bubble here? There's a lot new bubble talk after today's action here.
I've been talking about this as a bubble for months. It is a bubble. I mean, again, if you look at all the methods that investors use, whether it's looking at PEs, whether it's looking at technical indicators, the 200-day moving average, this market is so overvalued that we haven't seen this kind of overvaluation since the dot-com recession, the dot-com bubble. And there are some indicators now. Dividend yield went down to almost a historic low today that we haven't ever seen. And so we are in a bubble. We're not going into a bubble.
On your live with Paul Dietrich at B. Riley. And let me talk to you about one of your favorite subjects. We talked to the biggest fans as well as the harshest critics, and that is Bitcoin and crypto here. We see Bitcoin well off its all-time high, which it achieved recently, down to around 65K here at the moment. I'm just kidding, of course. You're not a Bitcoin believer or a crypto fan at all, but you certainly been watching what's happening, and it looks like some of the air has come out of this bubble here.
Well, yeah, but there are no fundamentals to Bitcoin. I mean, it's nothing, there's nothing, at least with gold, there's a precious metal that for thousands of years people have, put a value on and at a fairly significant value. There is nothing in Bitcoin other than an algorithm and some zeros and ones backing it. No one knows what's backing it. There are no fundamentals, so it's like meme stocks. It's just people with too much money and too little sense. They don't know what to do with their money.
All right. Let's go back here to good old General Electric, which has split itself off. Vernova debuting on the New York Stock Exchange today, a spinoff from GE's aerospace-only unit. GE Vernova is what it's called here. This is launching as a separate company. What are your thoughts about what's happening there at GE and this new GE Vernova that started trading today?
Well, I thought it was a good idea. When you have completely separate businesses and they're big, it probably makes some sense to split them into different new companies, because that unleashes all the benefits of that company, and almost always they're more valuable separately than they are together. Conglomerates are sort of things of the past, and I think you're going to see more and more of this type of breaking off of big sections of companies when one part of it has nothing to do with the other.
All right, and people look forward to your very thoughtful analysis that you put out at B. Riley Wealth. We look forward to your next write-up. And let me ask you, what do you see ahead here now that the first quarter is in the Wall Street history books, and it certainly was impressive, record-shattering first quarter here. We've gotten off to a rough start here in the second quarter. What do you see ahead for this market? Well,
there are some signs that consumers are continuing to spend. I think that that's going to end sometime very, very soon, because people are not spending out of their savings, but they're spending out of their credit card debt, which we've only seen during the dot-com bubble and the last great recession, 2008, 2009, where people are hitting up against their credit card limits. And don't forget that they're now paying 20 to 30% interest annually on their credit.
The countdown is on for the 2024 NFL Draft, presented by Bud Light, live from Detroit, and you can attend in person for free.
Welcome to the NFL Draft.
See the next NFL stars and experience the ultimate NFL fan festival, featuring live concerts, interactive games, player autographs, and more. The NFL Draft, presented by Bud Light, April 25th through 27th. Visit NFL.com/draft access to register for free entry today.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show. Comedian John Christ.
How long have you been in Nashville? Let's see, 2018 is when I moved here. I lived in an apartment. I didn't know anything about it. I lived in L.A.
You were living in L.A.? How was that?
Yeah. Well, let's see, good for my career. Sent me to rehab, though, so that's pretty much the sum of it.
The Sean Ryan Show on YouTube or wherever you listen.
That credit card debt. And if history is any guide, we're going to see consumer purchases and buying and spending starting to slow, and slow dramatically. That's what happened in both of the previous two recessions. So I'm, we saw with the JOLTS report on jobs this morning that the amount of jobs that were available, say even a few months ago, which were 10 million, they've dropped significantly and they continue to drop. And eventually that's going to affect the jobs market. And once that happens, then I think we're going to see a slowdown in the next 6 to 9 months.
At this point, Paul Dietrich, any specific places where you are putting money now and or taking it off the table?
Well, I think anyone putting new money into this stock market is not very bright. This is, at some point, there's going to be a correction. I mean, the two things we know for sure is that the laws of gravity have not been repealed and the stock market cannot go up forever. There is going to be a correction, even if there's no recession, even if there's a soft landing. At some point, someone's going to ask about earnings, someone's going to ask, about fundamentals. And when people start focusing on that again, we're going to see a serious drop in the stock market, no matter what. And so I've got most of my clients in short-term treasuries. You can get 4 to 5% in that. I've got them in gold. That's done very well for the last 12 months. And I would not be, remember what your grandmother told you when you were a little kid: buy low, sell high. You don't want to go into the highest market that we may have ever seen since the dot-com bubble.
Paul Dietrich, Chief Investment Strategist at B. Riley Wealth. Thank you very much, Paul, for that thorough assessment and for joining us live here this afternoon.
Thank you.
Folks, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. We're all good at preparing for earthquakes and fires here, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became a lawyer to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is hit that button. Believe me, you'll feel a lot better having set up this for yourself and your family. The number is 833-88-SHARK. That's 833-88-SHARK. With the population exploding and increased vehicles on the freeways, be proactive, prepare for the worst, and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 833-88-SHARK. 833-88-SHARK, or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Yep, gold. Gold back in the spotlight, hitting record highs today, up more than $20 to $2,302 and change. A record high for the price of gold. Silver also along for the ride, well off its record high, but moving higher. Right now, silver up 38 cents today at $26.30 an ounce, and platinum up $2.80 at $9.37 and change. The overall stock market pulling back on the second trading day of the second quarter of 2024. The Dow down nearly 400 points, settling at 39,170. The S&P 500 down 38 at 5206, and the Nasdaq down 157 points at 16,240. The yield in the 10-year note has moved back up to 4.36%. Checking the cryptos now, Bitcoin has seen a wild ride after hitting record highs last month. Right now, down about $400 at 65,726. Ethereum up 7 at 3,281, and Doge at 18 cents. GE Aerospace and GE Vernova began life today as two separate stocks on the New York Stock Exchange. They rang the opening bell today in New York. GE Aerospace shares now trading under the GE ticker of General Electric as an independent company. It said now it expects to generate $10 billion of operating profit in 2028. It'll report quarterly earnings on April 23rd, according to MarketWatch. We see GE Vernova shares rose nearly 4% this morning, but closed lower by nearly 1.5%. The stock had changed hands in recent days on a when-issued basis. GE Vernova's ticker symbol is GEV. Mottek On Money continues here, 790 KBC. President Biden campaigned in 2020 on a pledge not to raise taxes on families earning less than $400,000, but that threshold is not aging very well. It's also proven to be false. Somebody got the calculator out, and it turns out now, according to Americans for Tax Reform Research, President Biden would need to raise the threshold to $474,537 in order to be consistent because of inflation. This according to the government's own inflation calculator. Let's bring in Grover Norquist now, America's leading taxpayer advocate, president of Americans for Tax Reform. I know you keep close track of all this, Grover, so take it from the top and tell us what we need to know.
Well, this is part of a long story where politicians say we're only going to tax rich people, and then inflation makes us rich and makes us taxed. And this is where the 400,000 promise, if you make less than 400,000, people say that's not me. Well, that's down now. One way of looking at it to what would have been about 337,000. Another 3 years, another 5 years of this, and it keeps coming down. So that promise of his over time will protect almost nobody. And we need to remember that people who say they want more money know that the place to get it is the very large middle class in America, not from a handful of billionaires.
All right, so he keeps talking about 400,000, but you've pointed out that this is it's been a canard, right? This is not. This is proven to be false.
It is. Now, mind you, he's the third person to do this. Clinton said he would never tax anyone who made less than 150,000, and he immediately moved in to try and tax energy and gasoline, which is everybody. And then Obama said he would never raise taxes, any kind of taxes. He's very clear, not just income taxes, any kind of taxes on anyone who earn less than $250,000 a year. And then he sort of cut it in half by saying, well, he meant a married couple, which takes it smaller. And then he said, the first tax increase he passed was a month and a half into his presidency on cigarettes. Average income of cigarette smokers, $50,000 a year. So he broke it within months. There were 8 taxes on middle-income Americans to pay for Obamacare. All of them repealed by the Republicans, but those were ones that hit people's health savings accounts and flexible savings accounts and raised the price of medical devices that go in your body, right? I mean, how are you going to drop the cost of medicine by raising the cost of things that they use in operations?
Mm-hmm. On there live with taxpayer advocate Grover Norquist. Here we are, April already. Grover Norquist, I have a feeling we'll probably be speaking again between now and April 15th. But based on what you've heard so far here in tax preparation and all that, and of course you're watching the IRS very closely. What do people need to know if they haven't already prepared their taxes here before the April 15th deadline?
Well, do get it in. File an extension if you have to, but pay roughly what you owe. File the extension and just finish it up, a little bit later. But one of the challenges we have is that the IRS is not very careful with your private information. They get hacked. One of the people who worked for them stole a bunch, thousands and thousands of tax returns, handed it to a left-wing group, which uses it, who knows why, and to do what with. The IRS never asked for the stolen information back. Give you some idea of, there's something wrong there with that culture, and we shouldn't be giving them more money. Obama wants to give them $80 billion. They shouldn't get a penny more until they reform what they're doing now.
All right. Well, we have a big presidential election coming up this year, and a lot riding on it as far as taxes are concerned, right? But in the meantime, the wheels of Congress continue to grind. And I know at Americans for Tax Reform, you keep an eye on what's happening right now. What is some of the legislation that you're watching that will be impacting us in the meantime?
Well, there's a good tax cut that was passed by the House, Republicans and Democrats. It maintains the faster expense.
America starts the day with America in the Morning.
First of 3 pushes of storminess.
Hi, I'm John Trout, your host for the latest news, politics, entertainment, business, and weather.
A speech with political overtones.
Our staff of correspondents provide a fast-paced look at the world with specialized reports from where news happens.
The judge's decision was based on finding there is a likelihood.
So far, the central bank appears to be threading that.
Concise, accurate, and fresh each day.
America in the Morning, the podcast, available wherever you listen.
So that when businesses invest in job creation, you don't get taxed for that investment. You expense it the way you do when you hire someone, or when you build a factory, you should be able to expense it. That's the law now, but it's phasing out because the Trump tax cut is being phased out. The Senate is debating whether or not to hurry up and pass that. I hope that they will. Now, Biden has announced his tax plans. If he gets for this next year, he wants to take our capital gains tax from just over 20% to 44.5%. That's twice communist China's. They're at 20. He wants to take the corporate income tax to 28%, which is higher than China's. He wants to put a floor under American taxes so that we can't compete with Europe and China by having lower taxes. Biden wants us to compete on lower wages, which is not the way we want to compete in the United States. We want to have less regulation and lower taxes and more rule of law, not lower wages for people. So he's got a whole and the carbon tax, of course, he's endorsed over and over again, which is a gasoline tax on all forms of energy, home heating oil, electricity, everything that you do to keep yourself cool in the summer or warm in the winter. So there's a whole string of tax increases that he's put forward. And again, more money for the IRS without reforms.
On the air live with Grover Norquist, with inflation eroding the president's pledge to taxpayers. We also heard from the Treasury Secretary, who is actually the one in charge of the IRS, right? Treasury Secretary oversees all of that. And she appeared on Capitol Hill recently. She was grilled as well. What were some of the big takeaways on that one?
Well, they're just not taking this whole thing seriously. They're not insisting that the IRS do what they're supposed to do. You're not supposed to have TikTok on your iPhones and iPads, but the IRS says, oh, if you want to bring your personal iPhones and iPads into the office and put people's private tax data on them and take it home with you, it's okay. It's not the law. The law says it's not okay. But the IRS says, we don't care if our people have TikTok on those computers. It's against the law to do that, by the way. And when told that they're breaking the law, they said, well, we don't care. That's your IRS. That's your IRS. And it gets to be a very significant problem. They destroyed 30 million documents, didn't tell anybody. Somebody found out about it and it leaked. And they still haven't been honest with Congress or the American people about what happened. They won't even tell you how you destroyed 30 million documents. That's if you stack them up in one pile, that's 2 miles high, by the way. What do they do? Shred it, burn it, bury it, dump it in the ocean? What were they? And why were they destroying those? And then they'd send nasty letters to people saying, well, you didn't send us this piece of paper. Well, how do we know that wasn't one of the 30 million tax returns and pieces of tax returns that the IRS admits they destroyed in only one place? That was in Utah. And they've got 6 or 7 different centers.
And last but not least, something that Treasury Secretary Yellen's talked about, the former Fed chair, Janet Yellen, by the way, and President Biden has been talking about this, basically imposing a 21% global minimum tax on American businesses, trying to coordinate taxes around the world, which I know you've told us would be a devastating blow to competitiveness and sovereignty and eliminate healthy tax competition between countries. For a long time there, we saw a lot of American companies move to Ireland, which could happen again if all of this happens, right? So where do things stand with that?
Well, Biden's pushing a 21% rate. The Europeans only asked for 15. So Biden is worse than the European position. He wants to keep our taxes up higher than they are right now. And why in the world would we have a treaty, which Biden wants, that would allow France to determine what our taxes are? The last time some European power decided to tell us what our taxes would be on the American people, we shot at them until they went away.
Grover, thank you very much for that important assessment. As always, taxpayer advocate Grover Norquist, the president of Americans for Tax Reform, live with us here on Mottek On Money on 790 KABC. Mottek On Money continues here, 790 KABC. Good afternoon. New car sales rising nearly 5% in the U.S. from January through March. Despite high interest rates, electric vehicle sales growth, though, slowed during the first 3 months of the year, with mainstream buyers wary of limited range and a lack of charging stations, among other things. Tesla global sales down nearly 9%. The company blamed on factory changes to build an updated Model 3, shipping delays in the Red Sea, and an attack that knocked out power to its factory outside of Berlin, Germany. MotorIntelligence.com estimates that Tesla's U.S. sales were down more than 13% in the first quarter. Meanwhile, the Biden administration has announced tough new emission rules on trucks, buses, and RVs. New thinking is the auto industry will never be all electric. Let's bring in Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast and our go-to car expert. Lauren, it's always great to have you with us. Thank you very much for coming to the line here this afternoon.
Well, thanks for having me back.
It was great seeing you on with Neil Cavuto. I used to work with Neil over at the Nightly Business Report, and I saw you discussing this new thinking in the auto industry that will never be all electric, especially given the resistance we've seen lately to EVs, and a lot of the EV companies are in trouble now. Give us your assessment for us here now.
All right. Well, we all know that the electric cars are being pushed by the Biden administration, but consumers are not 100% thrilled with this. They don't like the lack of charging stations. The ones they do go to don't function. They don't charge fast enough. And then you have to have one at your house, which costs a lot of money. And some people are finding out that if they don't tell their insurance company that they've put a charging station in, they may not have full protection and coverage. So that, plus the fact that the insurance rates are higher, the cost of the vehicle is higher, there's a lot of limitations, and I think consumers just don't like it for everyday use. Now, if you're running around town, you don't travel at all, electric cars are a great solution. But even in the state of California, where Los Angeles has been pushing quite hard to make everyone go electric, the fact is people can't afford new cars. The cost of purchasing a car is higher, the interest rates are higher. There's so many factors that are not in everyone's favor. So consumers are starting to look at hybrids. And this has already been proven, like I've been saying for quite a while. In the last quarter for the auto industry, the big sale area was hybrids, whether it be SUVs or crossovers. That was the trend also at the auto show. And a perfect example is the 2024 Hyundai Santa Fe, the 2025 Ford Explorer. Those are just two examples where they don't offer a plug-in version. They're only offering hybrid or gas, letting you make the choice. But I asked each of the manufacturers, and there's many of them, they've all said that they're going to offer electric because they have to. But the fact is they don't make money at it, and consumers aren't buying it, and they're getting stuck on dealer lots. Like a Mercedes, all their EQ lineup, which is all electric, they're having trouble selling them as well, and they're just stacking up on dealer lots, and that's not good.
Any bargains there?
Not really. I mean, there are some incentives if you're looking at a Ford F-150 Lightning. Some of the more expensive electric cars, there are some bargains. If you are looking for an electric vehicle, you'll note that they've lowered the prices even on Tesla. The one I would tell you to be very careful of is Fisker. They lowered the price by 40%. So those that paid $60,000 for their EV, which is a very cool vehicle, doesn't look good for them. They've stopped production. They're out of money. They were going to partner in with Nissan. They've got the price down to $26,000. But the problem is, if they go out of business, which it does appear that's the case, you won't be able to get parts or service. So that could be a problem.
Right. Fisker, according to the latest reports, having serious financial difficulty. And if you've seen the latest headlines, more than 40,000 customers reportedly have canceled their Fisker Ocean reservation. And Fisker, the other report said Fisker Ocean lost about 70% of its value in just 2 months. So what about Fisker? What do you see ahead there?
Well, I think part of the problem was their financials. For some reason, and I guess when you're building a car company, you would probably not pay yourself $26 million, which is what Heinrich Fisker paid himself last year. I think that money needed to go back into the company to help build the company. I'm not sure who was running his accounting department, but they never had all of the payments corrected. They've lost checks There's some people that checks never got cleared. So there's a lot of mess on the accounting side that needs to get sorted out. That's pretty critical for running any car business, or let alone any business. If you can't figure out the financials, you can't make money, and you can't figure out where the money went, which seems to be a huge problem. They've been pulled from the stock exchange already. My guess is that they might find more than the IRS in their back pocket very soon.
Another report shows the 2023 Fisker Ocean priced at $24,999, and this is the crossover. It looks like it's cheaper now than the Nissan Leaf by about $3,000. So doing everything possible to get those cars out of there. Yeah, of course.
Be very careful if you're looking at a Fisker Ocean. It sounds great. The price is right. You will not be able to get parts or service if they go out of business. It's happened before with the previous Fisker. Unless you've got somebody who's really good at electrical and has access to parts, the problem is those parts won't be available if they go upside down. And that's true with any car company or any company at all. So it's always good for you to do your homework. You're better off buying a Nissan Leaf. You can go to any Nissan dealer. You got a problem, they'll give you something else to drive. They've got parts and service all the way back with a good history. You could buy a Prius Prime would also be another option for you.
All right. What about Lucid?
Lucid is a really cool vehicle. It's extremely expensive. They're having some financial issues as well. However, they just took a deal with the Saudis for $1 billion. So they've got some cash to play with for a while. I do like their product. If you haven't driven one, it's absolutely a unique piece. Beautiful product with long range. They now have an SUV that is out. They had it at the New York Auto Show at an off-site location. But it seems like they're here for a little bit, which is good. I do like their product.
All right. In the meantime, we did see sales up first quarter of this year for the major car companies. EV sales growth slowing during the first 3 months of the year. What do you see ahead for this year in the car business?
Well, it looks like that SUV and crossover market is still going to be very strong. The hybrid market is really what consumers are looking at. Those that are thinking about buying new cars, they're looking at what's available in the hybrid market. So therefore, you get whether it be plug-in hybrid or just regular hybrid. So a regular hybrid, you wouldn't be plugging it in. On the hybrid, you would get your electric portion from plugging it in. But customers don't want that. They want to be able to have that really great fuel economy and still be able to have the new technology, the new safety, the new vehicles. And there's quite a bit to choose from literally every car brand. Right now, Hyundai and Kia and Genesis have really taken the lead in the marketplace. It used to be that you would say, the benchmark was always the Germans. Well, it's not so much anymore. They're kind of going all electric. They're putting themselves in kind of a pickle. The only exception to that might be Volkswagen. They're putting out the Atlas, which is their 3-row SUV, which has done very well, and their Atlas Cross, which has also done pretty well. It's a 2-row SUV.
Terrific, Lauren. Thank you very much for that important update here on the car business. That is Lauren Fix, our go-to car expert, editor-in-chief of Car Coach, and the co-host of the Total Car Score podcast, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back tomorrow at 4 with more on Mottek On Money, 790 KBC.
You met Lala Kent on Vanderpump Rules. Now Lala and her friends share everything on Give Them Lala.
I'm expecting my second child. Which is very, very amazing.
Congratulations.
To say. Feels
We're
that
all
way.
with child.
You can say she's pregnant, she's knocked up, anything except with child.
Oh, I love with child. I'm going to be saying it all the time. Yep. Excuse me.
Yes.
6 feet, I'm with child.
Watch what Lala is talking about on YouTube or search for Give Them Lala wherever you listen.